Revival scent.
We asked Kenyan women to tell us what they look for in a lotion.
Leo tunaweka kwenye jaribio body lotion ya bei ghali na ya bei nafuu. Why pay more? Nunua Nice and Lovely body lotion. Ni bora zaidi kwa bei nafuu. Inai-transform dry skin kuwa deeply nourished na kui-smoothen.
It's just nicer and lovelier. Chagua Kenya's #1 body lotion.
Every Sunday to Wednesday at 10 p.m. Catch a spellbinding story of deceit.
Do you even know what he did to me?
Yes. Do you really think that you have the perfect family?
Playing the lover can be so very tiring at times.
In the midst of rivalry.
You don't have power over me.
Of hope.
But inside that woman, there's a sensible woman.
And romance. Si Nos Dejan, every Sunday to Wednesday at 10 p.m.
This is Jeff Koinange live.
You went through a very difficult time.
It's tough.
Accepting that is there means you have to have a serious change of behavior.
Will life ever go back to what it was?
Life is going to change.
Eventually, I mean, nature will overcome this thing.
What I'm challenging you. What is that?
So what's going on?
No, I believed what I believed then, and so I exercised my vote and my people's vote in that way.
Gentlemen, the eyes must have it.
Fake news. Fake news, I'm telling you.
After 6 years of Kenya's economy serving Kenya's politicians, I think it's about time the politicians start serving Kenyan economy.
If you can change the mindset of a few parliamentarians, you can manage the city.
Jeff Koinange live every Wednesday, 9 p.m.
All right, a very good morning. Welcome back to Daybreak. Hope that you're having a good day so far. Cold one, chilly in Nairobi. But nonetheless, we must continue to have this conversation. Must keep showing up. That is the assignment we have every day. Must keep showing up. Right, today's Wednesday. And Wednesday, you know, we talk about matters health. And remember, on this show, health is broad. We talk about mental health. We talk about actual diseases, and then we also talk about, most importantly, financial health, and that's what we're going to focus on today. We're going to start with financial health, and then later on, after we take a break, we're going to come back and talk about dental health. We invite you to, if you have any question, to send your SMS to 22422, and the hashtag to use is Daybreak. Allow my guest to introduce himself.
Hi, good morning.
Yes.
I'm Wadi Kilonzo from EFG Hermes.
Mm-hmm. What does EFG Hermes do?
So EFG Hermes is an investment bank. So we started off in the Middle East back in the 80s and have expanded across many countries. And we came to Kenya just over 5 years ago.
Right.
And we're a stockbroker in Kenya and other investment services as well.
Right. So, of course, one of the biggest terms that has been thrown around this year, I know we're just having a conversation and talking about how everybody is now starting to look back and also start to plan forward. One of the biggest words that's been thrown around is inflation. Everywhere you go, everywhere you look online, people are talking about how times are hard. Things are thick, basically. So I guess one of the first questions would be, what are some of the events that have taken place that have had quite an impact on some of the capital markets that we have?
Sure. Look, I think inflation is obviously a very big issue because it's global. It's not just unique to Kenya. So, you know, obviously we had the COVID pandemic, and unfortunately situations like that create a bill that needs to be paid. There were disruptions. China is still going through various lockdowns. So if you look at the supply of goods, the transport of goods, all those costs went up. And obviously in February we had the shock of the Ukraine-Russia war, which also sent oil prices, a ripple effect. Right. And Russia and Ukraine are a very large exporter of wheat and a lot of other oilseed commodities, but also that feeds into the rest of the economy. So we had that shock from that side, on the good side. And I think also specifically to East Africa, there's also a drought that's been ongoing for probably 3 years. And obviously this year looks really bad. Right. So these are some of the issues that come into the inflationary pressures that we're seeing. And hopefully these start to wear out and start to have peaked. And another thing also to mention is, obviously, we had the subsidy on oil prices, on fuel prices also removed, and that's another shock as well to people. So it's understandable that prices have really increased. But it's not unique to Kenya. It's really a global issue. The question is just how, on a local basis, you can deal with it. You know, I think it's instructive that obviously it looks like it's raining in certain parts of the country, the right parts of the country. So hopefully food prices start to come down. The world, in terms of shipping costs, is all coming down. So I think, you know, looking forward, hopefully the cost of goods will start to come down. And you're seeing the government starting to point out that actually certain things have become cheaper.
Right.
Question is whether they become cheaper at the shops.
Right.
I think that's a question for you and I, yeah,
exactly,
and our households in the end.
So I guess for now, the people who are still reeling from some of the effects of even the pandemic, and of course, like you said, the price of most things have gone up because of the war and all this. So as a business right now, how are you surviving? Of course, the most businesses will say, you know what, first off, let's retrench some people, cut some costs. But how does a business survive or thrive in these kind of times?
Look, I think it's really difficult for a lot of people, because if you think drought, all Kenyan businesses, all Kenyan are used to drought. Drought happens regularly. I think what we're not used to is what happened over the last 3 years, you know, since 2020. I mean, sometimes I think to myself, there was a time you felt you couldn't even say hi to your neighbor. If you met them in the lift, you were like, you know, do I really need to talk to this person? Your child runs to a stranger, you're like, oh, panicking. You know, so we come from a really long way. So there's a lot of things. No one could have foreseen a war in the Black Sea area. And so I think as a business, these are the times where you learn to be nimble. I think specifically to Kenya, the good thing is that at least we're over the political cycle. So if you're a business, you're not worrying about the political side of things. So now you can start to invest. And we're starting to see the banks are lending as well. You know, a few banks have released results this past week. So you can see that credit growth loan growth at these banks is somewhat 20%. And so this is a big improvement from before. So if you look at the central bank figures, you'll see the private sector lending growth, which is just a measure of how much credit is going to people like you and I and businesses, is growing. So that means that people are getting money and they're investing. And so I think right now as a business, you just have to position yourself for growth. And that's just not unique to Kenya. I think everywhere in the world, people are coming from a very tough situation. And, you know, the silver lining to this cloud is that at some point people have to get back to normal activities and people have to live, which means that businesses have to grow to serve those needs. So I think as a business, you have gone through a very tough learning period. So I think we should just say that lessons will have been learned, and now you position yourself for the future.
Right. And you talked about, you know, borrowing as well. When do you think again, as a business, when you want to borrow, what are the things that you look at?
Well, you know, can you afford it? I think, yeah. I think there's always been a big debate in Kenya about the price of credit. And by price of credit, I mean how much interest you're paying. And that led to the disastrous rate caps, you know. But when you actually look at, say, the proliferation of digital lenders, where people were borrowing at annualized rates of a couple of $1,000%, it actually shows you the issue is not price. It's actually people need credit to grow their businesses, because presumably the people borrowing at that expensive rate are traders. Let's say they need something for this morning to sell for the day, then they settle that credit and then they borrow again, or maybe it's a weekly or maybe it's a monthly type of thing. No one's borrowing at 1,000% for a year, because there's no business that could sustain that. So I think as a business, if you're looking at borrowing, you need to think, okay, shop around, you know, where is the right place to be? You know, which banks are offering the right type of products for you, and the length of that loan and what you need. But I think people also just multiply the number by 12. I mean, it's a very basic way. If someone says, this is what it is per month, multiply that number by 12 and say, does that make sense to me? Is that a smart decision? And I think that sometimes people need to start asking. But there is desperation for money. So in a sense, people are willing to pay up for it. So yeah, that's what I would say. I think the cost of the credit is probably the most important thing. And then what you're going to do with it. definitely, yeah.
Right. And one of the things that people have, well, there's information about, but not that much information is now when it comes to like investing. So like when you talk about investors, you know, especially now, of course, like you said, they're closing down the year, but then we can kind of look at the next 12 months. For example, from the retail investors, what are some of the things that they're supposed to be on the lookout for?
Yeah, it's really interesting time because obviously you have high inflation. So the last numbers that came out were 9%. Okay. You know, Kenya has always been a sort of sub 5% type of economy. I think if you talk to people in their household, certainly in my own household, I think inflation has certainly been higher on food than 9%. You know, the bills are a lot higher than that. So anyway, when you're looking as an investor now, you're thinking, okay, inflation is 9%, so your money value is being eroded by 9% every year. Right. So where can you keep your money where you're earning a return higher than 9%? So, you know, just a quick screen, I think as a retail investor, certainly there are some counters on the NSE, which are really interesting. You know, if you look at companies like BAT, they're paying a dividend of 13%. Right. So at least that protects you. If you look across, I mean, Bank Kigali, which is a Rwandese bank, but listed in Kenya, also has a dividend yield of 13%. And I think the most important thing actually is that Kenya is cheap. And by cheap, I mean that the stock market really has been sold off. So not only are you getting a high dividend, but also you have capital appreciation. So your total return really is not just the 13% that, say, BAT is paying you. You're also, in a sense, hoping that if you say, I'm throwing out a random number, let's say the stock is at 450 shillings, that in 6 months or 12 months time, maybe might be 500. And then you'll have made 50 shillings on top of the dividend return. So I think that's what as a retail investor you should be looking at, is how do you protect your money from being eroded? You know, sometimes putting it in a bank deposit may not necessarily be the smartest decision, but it probably is the safest decision. So I think you don't put all your money in equities, no one would say that. So you just have to sort of think, what do I need for day-to-day? What's important? What's school fees? Right. You know, what's rent? What's car payments? What's electricity bill? And then whatever you have as an excess, then you can start to think to yourself, well, I can invest that. There's no point in keeping that in the bank. And every year or every day, the value of that is being eroded by inflation. Right. So you invest it. And I think that's what you need to do. Think about your basic needs and then think about what you can speculate with.
One of the things that people think about, again, is the risk. Like you said, it's safer for me to take my money, put it in a fixed deposit, tell them, you know what, let me not touch this money. Yeah. If I touch it, this is the penalty and all that kind of stuff. So if you look at just how, if you can give sort of a forecast based on the information you've had moving forward, what do you think are some of the places where there's the best idea would be low risk, high return?
Yes.
So
where do you get that?
What does that look like?
That's called El Dorado, yeah? Basically.
Right.
You know, everything has risks. You know, even if you buy a government bond, there's still a risk that that government might not pay you back. Right. But we think it's so small that we think that it's a zero risk. So I think certainly, and you can see it, you can see in the infrastructure bond, which was yielding 14%. You know, the bids were huge relative to the amount that was tendered. I think yesterday they reopened it for 5 billion and they got something like 14 billion in terms of, or higher actually in terms of bids, which shows people were chasing that return. Because 14%, to go back to the inflation issue, is higher than the 9% inflation that we have. Right. So it makes sense to buy, or at least have some of your assets in that bond. So I think, yes, we all want low risk, high return. So when you look at the stock market, you basically want a good, well-run company. So you want a management team that's strong. You want a company with a product that when you go to the supermarket, that you buy. You know, sometimes, you know, you look at it and you're like, what is in my shopping basket? Right. Who's making this product? You know, are you buying beer? So are you a Tusker person or a Heineken person? Right. If you're a Tusker person, then, you know, EABL certainly looks interesting. Are you someone who is using financial products? You know, what app do you have on your phone for banking? Are you banking with Equity Bank? Are you banking with KCB? Do you like their service? So I think start there and look at brands that you know and you recognize and have been around for a while. And I think that's always a good sign of quality. So look for quality, which should mitigate the risk factor. And then after that, start looking at what really you can make. But I think that it's a slow journey. You start small, you start investing, hopefully as you grow older, you have more disposable income. As your kids finish school, then you have more disposable income. As you pay off your mortgage, your car payments, and you have more disposable income, and then you increase your investments over time.
Right. And so most of the times as well, just in terms of, I just realized I'm looking online, people are asking me, we need to define some of the terms. So first, let's start with what a retail investor is.
Okay.
Right.
So a retail investor is like you and I. Is basically someone who is investing their own money.
Okay.
So a retail investor can be a very basic type of person who wants to invest 100 shillings, 200 shillings, all the way up to a high net worth investor who has a lot more money. Now, the opposite of a retail investor is an institutional investor.
Right.
So an institutional investor, so when you buy a unit trust, let's say, so you go to Old Mutual or Britam and you buy some of their products that they're selling to a large number of people in a pooled amount of money, or a money market fund or something. That institution that is selling you that product is an institutional investor. So one person at a time, that's retail. All mass together, that's institutional.
Right.
Yeah.
And also, so you talked about money market fund, which is also, many people want to invest in the money market fund. The idea is, of course, the whatever percentage, 7-8% per annum, whatever it is that they give you.
Yes.
And thinking about it, you've also talked about whether somebody starts with 100 shillings.
Yes.
Or with $1 million.
Yes.
So for it to make sense, in your view, for those who are jumping onto money markets right now, is it better to put in a huge amount of money for it to make sense? Or you can, like you said, just start small and grow it?
I think ultimately it depends on the size of your pocket. But if you're new to something, it's also good to dip your toe. You know, it doesn't matter whether it's 100. You could be worth 10,000 shillings. So 100 shillings is a lot of money to you. You could be worth 1 billion shillings, and 100 million shillings is a lot of money to you. At the same way, I think, so you'd be cautious. You'd look, you'd see. And this sometimes goes down to what I think a lot of things you read about in the paper, where people invested in something that didn't turn out to be what it was.
Right.
Because we all have to do a little due diligence. Just Google. I mean, there's so much information out there.
Right.
Just see the good and the bad and the ugly and understand what people are saying about this company. I think during pandemic time, we were talking about Reddit forums, where retail investors were now fighting institutional investors. And there were certain stocks like AMC and GameStop, which were rallied and people were pushing. And it was individual retail investors doing that. But that was speculative behavior. So I think you start small, and and I think as the industry as well on the fund management side becomes a lot more accepting and available to retail investors, and where people can put in 100 shillings, and over time, and you can see the government is starting to talk about this. It's starting to talk about, what are you saving? Because if you think in the old days, people would buy a plot of land and then think this is where my retirement home is, and they would put their savings into putting that up. But if you retire and you have built a house, there's maybe no income from that house because you're living in it, you're occupying it. Sure, maybe your costs have gone down, you're not renting in the city, you're living in the countryside, things are cheaper. But your day-to-day expenses have to come from somewhere.
Right.
So it's very important when we think about, yes, there's the individual savings that you can make, the 100 shillings, 1,000 shillings, 1 million shillings, depending on how deep your pockets are. Then there's the other statutory stuff, which is your mandatory pension savings, where you're contributing to a pension plan and your employer is also contributing to a pension.
Right.
And that when you retire, there will be a decent pot for you that at least can take care of your needs when you're living in your house up country or wherever you may want to live.
Right.
So I think that's where we need to think about as well. Do you have a nest egg? And it's a conversation sometimes here sometimes we live day to day. So it's very hard to think about tomorrow. But if you look across the world, countries with strong pension schemes, people are much more comfortable in their old age.
Right.
And also that removes the pressure on people like you and I who are in our working years from supporting the elderly, because they actually have their own, this is a sort of like, call it the sweat tax or something, yeah? They looked after you, they took you to school, etc. Now it's your turn to pay it back, yeah? Which is nothing wrong with that. But at the same time, people have worked sometimes for 30, 40, 50 years. Their money that they earned should also look after them as well. So I think these are very valid conversations, and I'm glad the conversation is being had, because we are a laggard. Even countries like Nigeria, pension fund contributions are very large as a percentage of salaries, and also as a percentage of what the employers are contributing to the scheme. So this all goes into how much you're putting in.
Right.
I think for a long time what we were mandated to put in was too little. And so I agree with that conversation that the country's having. But the debate is healthy, because you need to save in order to invest. And the power of this is actually when you think about the conversation around debt in Kenya and the projects that we have undertaken. There's no reason why our pension schemes shouldn't have built the expressway. And then you see, in that case, we'd be having a very different conversation.
That's right.
Or even the SGR, because there is money in Kenya. We can see it. We can see how much money goes through the betting platforms. We've seen how much money goes through some of the scams that have come through. It's not small money. Right. People have money under the mattress. The pension funds have plenty of cash. You can see all the buildings they put up all the time. Right. There's wealth. It's just allowing it to participate in the real economy and then generate returns for you when you're in your twilight years, living somewhere. Yeah.
When we talk about that, even as wrap up the saving culture and the investing culture, like you've said there, that it is important for you to save first before you can invest. So this is, there are different people who, again, earn different amounts. Yeah. So what is is there, say, we've heard different formulas about save 20% of this, save. Yeah. What would be like a good saving culture where we're looking at
how much money should you put? Yeah.
How much money should you put aside?
It reminds me of a story of how De Beers created the story that you need to spend 3 times your monthly salary to buy an engagement ring for your wife. Yeah? It's the greatest marketing spin. Yeah? Right. So plenty of people go there multiplying their salary by 3.
By 3, yeah.
To buy a diamond from De Beers, and it worked.
Yeah.
So question is, how much money should you put aside?
Right.
The number that's kind of coming into my head is 10%, but I don't know. It's really dependent. So I think maybe what we need to shift the conversation away from sometimes how much you should put in to how much do you want at the end out of it. Okay. So so let's start the other way around. So if you're doing a pension, then I think your pension provider or whoever you're buying this product to, you should be asking them and say, look, I want to be able to afford electricity, to pay my water bill, to have health care, all the things that you want in retirement. So say you're saving for retirement, yeah? And then they tell you, well, so what's your time period? Right. Do you have 20 years? How old are you? Are you 25? Okay, fine. If you're 25, you're going to be in the system for a very long time. Are you 40? So you're closer to retirement. Are you 50? You see, these are all different things. And they tell you, okay, so you've got 10, 20, 30 years. This is how much you need to put in to basically grow your pot to a particular amount at the end of retirement. Now, if you're saving for something more specific, short-term, let's say you're saving for a new car, or you're thinking about education policies. Again, these are the sort of things. So you start from, okay, schools are this price. Inflation is this, so fees keep going up every year. So I need to be putting aside a certain amount. So I think you need to really look at your needs. Now, if you're a manual laborer and you sit there and you say, I want to buy a Ferrari when I'm 60 and I retire, right, then obviously the means may not get to what you want. Right. Yeah? At the same time, if you're a professional with a good job, with a good salary, a pension scheme that you have from your company, then maybe some of these things are attainable. So I think we all just need to think about what it is that you want and what sort of quality of life you want, and then you make the necessary sacrifices. I'll tell you a story. I was reading, Asia, we talk about Asia with a very big savings culture.
Right.
I recently went on a trip to Vietnam. It was a business trip. And in one of the papers, I read a story where a lady saved 90% of her salary for a number of years. And what they were saying is she now owned 2 apartments. So she basically gave up all luxuries, whatever she considered as a luxury.
Right.
I guess holidays or nice clothes or something. She lived extremely frugally and now has assets. So I think that's another way also where you have a very specific near-term goal and you basically just make the sacrifice to get there.
Right.
The problem, I think, and I see this a lot, is that actually people say, well, our salaries are low, which isn't wrong because wage growth hasn't grown. You know, and that's probably been one of the biggest issues for Kenya and we're facing now, that we really haven't created jobs. We haven't created mass employment. I'll give you another statistic also from Vietnam. So Samsung, we know Samsung phones, microwaves, TVs, etc. In a year, exports almost $40–50 billion out of Vietnam of products that they're making in Vietnam, that they're manufacturing in Vietnam. Apple is now moving some of its manufacturing capacity from China to Vietnam. So when you look at that, if you think about a person who puts together an iPhone or a microwave, will be a medium, middle class type of employment. You know, they'll be earning a decent job, you know, they'll be able to take their kids to school, they'll be able to perhaps afford a small car. And those are the type of jobs that you need to create. And that means attracting investors to come here and making it easy and competing on the global field. I think sometimes people think a bit too small, but actually there are products in Kenya where we're world leaders. Look at flowers, for example. Look at tourism, some of our product is amazing. So it's just encouraging that and creating. Now that's not for you and I to go and create jobs, for other people. We can create 1 or 2 jobs at your house, Right. But that's now, but these are conversations you can see are happening now on the national stage. So hopefully they feed in, and then jobs are created that are paying more, which then means you can save more. And that then means that you can improve your life and you can have a better retirement. It's chicken and egg, unfortunately, but you know, this is where we need the government now to do the job that we elect them for.
To do, yeah. All right. Well, of course, we'd like to say thank you so much for coming through. But before I let you go, in case people want to contact you, for more advice on all the areas you've touched today.
Sure.
What are the ways they can get to you? Yeah,
so the company is EFG Hermes. We are a trading participant on the NSE, so you can find us online, or you can go to the Nairobi Securities Exchange website, or CMA. They usually have a list of trading participants, licensed trading participants. So you can contact us there. We're also on Twitter, we're also on Facebook. So those are also ways you can directly link with us. Right. And we also have a very good retail app. We're talking about retail and investing. So we've invested, so EFG in a lot of its markets, there is very large retail participation, whether it's Egypt or the Middle East. So we've got a full suite of products, of online apps, basically, that allow you to access the market. So there are ways to reach us. So you can find us, maybe social media handles is the easiest way, EFG Hermes Kenya.
All right, so that's EFG Hermes, H-E-R-M-E-S Kenya.
Yes.
All right. Well, I'd like to say thank you so much for coming in. We hope that, you know, you've got a little bit of something else. I told him that we're going to get him back here in January so that we can look at the focus of the year as you write your resolutions and everything, and as you spend all your money in December. I'm kidding. Hopefully you don't do that, but we will definitely have more conversations around our finances as well. But thank you so much for coming. I want to take a short break. When we come back, we're going to talk matters dental health, and so you also prepare your questions around that. You know, so it's an interesting joke. It's because we're talking about money first and then dental health. So literally, we're going to put our money where our mouth is. All right. Peace and love, people. I'll see you on the other side of this break. Thank you so much.
Okay. Thank you.
Thank you.
Thank you.
Thank you.